You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I'm pretty much all in right now. Take a picture of the poker guy going all in. That's me right now. So I'm pretty confident that we've seen a major bottom in this sector. And the positions that I've completed recently, I think they'll be a lot higher within the next 12 to 18 months.
Welcome back to Mining Stock Education. It's the monthly check-in time with Dr. David Erfle. I've made him a doctor because of his experience in junior miner junkie with a Y.com. Dave, thank you again for joining me. Last 30 days, silver and gold have looked really good, but yet it seems like nobody cares about the sector still. What's your updated thoughts?
Yeah, it's amazing. Yeah, thanks again for having me on. It's incredible. You have a $200 move in the gold price in less than a month, and the silver price goes up even more percentage-wise, and still nobody really cares about this sector. It's amazing. If you take a look at the discount right now on something like PSLV, which is the physical spot ETF, it's trading at a 5% discount to the spot price. Yet at the same time, if you want to go buy a physical ounce of silver, you're going to pay a huge premium to get it in your hand. And also, if you take a look at the ETFs, the GLD and the SLV, people aren't buying them. If you see the gold price, what it's done, and what the incoming buying in the ETFs, it's just so poor. It's amazing. It's creating this incredible opportunity that just continues. The opportunity's been there for the past several months, and the opportunity just continues because now we have this tax law selling, and you never really know when this tax law selling is going to end in each particular junior, because, they don't ring a bell for each one. But what kind of is a bell? I know you haven't asked me this, but you probably will, about tax law selling. So I'm going to go ahead and go into it. Is if you have, first of all, you need to have a watch list of companies, that you've previously vetted and you want to get into. And November, December is always a great time to do this. Is to monitor these stocks and watch them like a hawk and wait for the volume to start picking up as they're going down. And if you see a huge volume spike, that's usually an indication that the tax loss selling has ended in this particular stock, and it's happened to several of my companies. I added to them on that spike, and they're up quite a bit since then. So that's a good way to judge what's happening in each one of the positions that maybe you want to get into or you want to add to. Because, as I said, last month in our discussion, I said, if you're not buying right now, when are you going to buy if you're considering getting into this sector? And if you are considering, this is a great time to do it.
When I first invested in junior miners, I came across the work of Mickey Fulp, and he did a good job, showing the historical tax loss selling season. And typically between the 15th and the 20th, you can see the capitulation bottoms.
Absolutely. I learned a lot from Mickey. Mickey's a great character, and he's very knowledgeable. Been in the sector a lot longer than I have.
So do you ever put in stink bids? I know you're so strategic on your entries, and you always tell your followers ahead of time before you buy. But I mean, would you like to be that capitulation bottom with a stink bid?
Well, I don't use stink bids per se. I have the stink bids in my mind, like because I tell since I telegraph everything I do to my subscribers, I tell them I'm looking to add to this position, and this is the area I'm looking to add in. If it gets down to this level or if it gets in this area, I'll go ahead and buy it. So that's pretty much what I do. And and as far as the watch list is concerned, when I'm looking to get into a company, sometimes these companies are on my watch list for years before I even consider getting into them. And it's happened recently in a couple, where they just got down so low, they just got so cheap, and the company's done such a great job. That's the thing. You take a look at these charts, and they look so horrible. And, but that's when you need to buy them, when they look so horrible. But at the same time, it's not management's fault. They've done the right things. They've raised money at the right time. They've got the good project. They got the right people. They got everything in place, which creates the opportunity for you. This is a company that, you look at it and you say, okay, they've got this much cash or they've got this much access to capital. Then it's a no-brainer to buy at a certain price where maybe they're trading at a net asset value to where the project where they proved up millions of ounces, they're getting zero for it in the market. And that's happening right now in a lot of these companies. They're getting no value for all this gold or silver or copper, or whatever it is they have in the ground.
Dave, I got a message on the YouTube in the last couple of weeks, and it said something to the effect of, Bill, you always feature people that are contrarian, telling us how good an opportunity is currently, yet we haven't seen much in the last 18 months. So if you were responding to that YouTube comment, how would you respond, Dave?
Well, that's the only way that you can make money in this sector, as far as I'm concerned, is to be a contrarian. You buy things on the way down, but you don't buy, your whole position. Okay, this is where it's gotten to this spot. This is where I wanted to buy it. I'm going to buy a whole position. You buy, 3/4 of a position or a half position, and, if it goes down lower, you're happy about it, instead of being upset that, I got in too soon. I didn't catch the bottom. First of all, it's almost impossible to catch an absolute bottom. And trying to do it is will make you go insane, basically. So, what you do is you buy it, you buy a portion of what you want, and then you hope that it goes lower. Then if it goes higher and starts taking off from there, then you're kind of upset because you didn't get a full position, but at least you got a position. So, it's a very tricky sector, and there's so many variables that you have to keep on top of. But that's what makes it such a great sector. It's extremely challenging, and I've been that way all my life. I'm not attracted to something unless it's very challenging, and this is a very challenging time right now. But I look at these prices, and I'm down 20 or 30% on something, and I don't care. Either I'll buy more, or I know I have faith in the company. Maybe the management team has made me a lot of money in the past, and that's the case with a couple of positions that I have. I'm down 20, 30% on it, but I don't care. This management team I know is solid. They made me a lot of money in the past on something that they've went from, discovery to finance stage or even production, and they sold to a major. So I have faith in the company. I have a good relationship with them. I keep in contact with them. I know they've got a lot of skin in the game, and a lot of times, especially right now, you can buy a lot of these stocks right now, these quality juniors, even less than management's all-in cost. Think about that. This is because we look at these stocks and we think, oh yeah, they've got founder shares, they got real cheap or whatever. I'm just a retail guy. I'm never going to make as much money as these guys because I have to go into the retail market and buy. Well, right now, you're seeing a lot of these companies are trading for less than what the management teams paid for their stock. And they're still buying in the open market, and they haven't lost faith, and they still got that access to capital, and they still got that great project that they're de-risking. So it's an opportunity for retail to say, hey, I can actually get in cheaper than them, and I can actually make more money than them in the end when the project is sold. And that's exciting.
That is exciting. Now, Dave, if you're a retail investor and you're looking for those opportunities, you call management and you ask them, what's your average cost basis? They say 12 cents.
One of my first questions. Yep, absolutely. One of my first questions.
The stock's at 8, but they got 600,000 in the treasury. Do you wait till they capitalize the company, or do you buy then? Like, what comes first, the chicken or the egg?
Well, that's the thing, and fortunately, they know I'm a newsletter writer. They know they're getting free coverage on their stock because I don't take money from companies. I don't charge, for covering the stock because, I'm an investor, just like my subscribers are investors. We're kind of all in it together. And so they know that what I do is conveyed to my subscribers, so I can get more information out of some of them than your average person would be able to. Like I could find out, are you planning on raising soon? And they'll tell me, well, look, we're considering raising at this time, or we're not. We're going to hunker down. We're going to cut down our drill program, and we're just going to hunker down and wait for the capital markets to improve before we raise. So absolutely, you just try to pump them for as much information as you possibly can. And ideally, you want to have the company have enough cash for at least the next 12 months, ideally. But if they've got this access to capital, and they're about to release a mineral resource update or a feasibility study or a pre-feasibility study or something that is going to be bullish to the market, you might want to buy before that, because they might be waiting until that's announced before they announce their finance. That's always a possibility. So there's so many things to think about, but the more you talk to management, and right now is a great time to do it because these guys are available. They'll talk to you, and you send them an email. Start off with, "I'm considering purchasing. I'm considering taking a position in your stock." They'll get right back to you.
So, we talk about these keep the lights on raises where you might see, and they're raising 150,000 or they're raising 400,000, which you and I know gets nothing in terms of project advancement, right. Pays the lawyers, pays the exchange fees. Maybe the guy running the thing gets 5,000 a month, whatever. That doesn't do anything for you as the investor. So but I've noticed through observation, especially in 2020, when gold got hot, sometimes an Explorco, in this case, with a good project, they would bring in a catalytic group. They'd give them a full warrant deal at like $400,000 at this. And then that group would take the share price from about 7 cents to 50 cents. I've seen it. And so if I was a retail investor and I saw a $400,000 financing, I know it's not going to do anything at the project level. Get on the phone, call them and find out what's going on. In one case, Dave, I observed it. And so the stock went up from like 7 cents to 12 cents. And so I put in some bids at 10 cents, good till cancel bids, never got hit. 2 months later, the stock was at 50 cents. And then I was kicking myself like, why were you hassling over 2 cents here? This thing ran to 50 cents. But it was this exact example where they didn't even have the geological success they wanted, but they brought in a catalytic group. And man, that thing flew. And if I was a retail investor, I'd be looking for those opportunities. Your thoughts?
That's where you take a look at the project, and you just get your magnifying glass out. Just take a look at the project. And if that project is really, really attractive, they're going to find a way, to raise money and attract the right people to get it to get it de-risked. So that's sure. It starts with management, but the great management team has to have, a really good project also. That's everything. That is everything. And, plus there's, also, you see companies that give up on projects, they sell it to a different company and they put a whole new perspective on it. That's happened with Discovery Silver, a company that I've talked about before and that your listeners probably know that I own. I went and saw the project recently. They bought the Cordero project from another company, and it was this low grade bulk tonnage project that really didn't really excite the market very much. But they had top tier geologists take a look at it, and they found a high core area, a core area with a high grade core area where they can concentrate on and make it a higher grade project. And they've done that. So, that's another thing you want to look at. You want to take a look at if a company has sold it to another company that has the proper people to de-risk it properly.
That's a great point. I got to ask you about a company I've probably asked you about 10 times since I started interviewing you in 2017. Bear Creek Mining. You used to call it the bellwether stock for the sector. What's your current thoughts on Bear Creek Mining, silver in Peru?
Oh yeah, I mean I've had a love-hate relationship with this stock for the past 15 years. I mean, great management team. They've done a great job of keeping the share structure pretty low, and now they've pretty much transformed into a growth-oriented producer while they were waiting for their Corani project in Peru to become more attractive to capital markets to get it funded because it needs a higher silver price. But it's shovel ready now. They spent over a decade de-risking this thing. And, the stock was trading at multiples higher than it's trading right now when the silver price was relatively the same, but they hadn't even de-risked the project to shovel-ready status. So it's, a stock like Bear Creek shows you, how much sentiment means to this sector. Sentiment is everything in this sector. So the company now has, they purchased a mine from Equinox, the Mercedes mine, which they inherited from Premier Gold. And they're basically bringing this mine back into production, this gold silver mine back into production. And they've had to borrow more money than they expected because the share price stayed, more depressed and longer than they expected. So now they've got cash flow, but a lot of that cash flow is going to pay off the debt to buy the mine. But they still got this Karani project that they're getting no value for, none whatsoever. And of course, the capex on the project has gone up a lot more than what the feasibility initial capex was. So, and then COVID happened and banks couldn't come to the site and look at the project, and then the silver price tanked. So circumstances made this stock incredibly cheap. So I bought a position in it, an initial position in it too early. It went down 50% for my initial position, and I just continued to add more shares. Did
you turn off your stop loss? Because you're so stringent on your stop losses.
I am stringent on my stop loss in a bull market, right? If I'm buying in a bull market and the stock goes down 20% from where I bought it, I screwed up, I'll sell it, and I'll get into something else. But if I know the sector is in the process of creating a major sustainable bottom, which is happening right now, I'll let the stock go lower, and I have a lot of cash, and I'll continue to buy more. So, that's what I've been doing for the past several months. I went to half cash about 4 or 5, 6 months ago, something like that. And I waited for, this situation in tax loss selling season and right before to start adding more, buying a few stocks that I missed on the way up in the previous run, have got down to ridiculous low levels again. So I took some positions in them, but mostly I've been adding to my positions. That I kept my core positions, and I've been adding to them because, and they go lower, and I just can't believe it. I'm like, wow, these things are being given away even more. So you just have to have a lot of patience, and you have to be investing in money that might not make very much of a return for a year and maybe 18 months to 2 years. But eventually, these stocks are going a lot higher because, I've talked about this before, the 7-year gold stock cycle, where gold stocks have bottomed every 7 years ever since the secular bull market started at the turn of the century. And each time they've made this bottom every 7 years, we've had this, this triple digit gain after the major bottom was made within the next 6 months to a year. So I'm very confident so confident that it's going to happen again that I've pretty much I've just invested the rest of my cash in my junior portfolio. So I'm pretty much all in right now. Take a picture of the poker guy going all in. That's me right now. So I'm pretty confident that we've seen a major bottom in this sector, and the positions that I've completed recently, I think they'll be a lot higher within the next 12 to 18 months.
Okay, we got the title for today's interview, Dave. Dave Erfle goes all in, right? Because we've talked about how you've been 25% cash.
Right.
But you've seen the bottom.
I'm very, very confident right now that we've seen the bottom here. I've been in this sector 20 years, and I thought I'd seen everything until the events of 2022 took place. There's a lot of strange things have happened this year, and I expect a lot more strange things to happen next year. But with the price action of the shares in relation to the metal, especially how cheap they are in relation to the metal right now, even after they've gone up 40%. I mean, the GDXJ have gone up over 40% in the past 2 months. And yet many of these juniors continue to go lower because, like I said, tax loss selling in each one will end at a particular time. And it's just presenting fabulous opportunities right now in a lot of these stocks. You do have to have a lot of patience, and you do have to be purchasing in cash. I wouldn't be using margin in this sector. You don't really need to, because there's so much leverage in these juniors when they start going up. And I'm pretty confident that the up leg has already begun. I mean, we're going to see some consolidation here because the GDX and GDXJ have hit strong resistance levels at 30 and 37 respectively last week after going up 40%. So I fully expect to see some consolidation here, but that's the opportunity that presents itself to people who still have some cash and are continuing to accumulate.
What about the greed factor coming into the junior miners? Do you think the whole FTX scandal?
A long way from that.
You're right, but do you think the FTX scandal could kind of dampen some of that speculative money to where people don't even want to throw money at speculative things, at least for a season?
Yeah, well, the FTX scandal has really helped the precious metal sector, as far as I'm concerned. Because,
but the juniors are speculative, right? People don't buy them for fundamental reasons.
Exactly. Yes. I mean, the last time we had a situation like this, where the ETFs went up, the GDXJ went up about 300% in 2016 in 6 months, and the same thing happened in 2020. Right. In about 6 months, it went up about 300% from the low. Right. But in 4.8 months instead of 6. And then afterwards, we had an exactly 26-month long consolidation process. Exactly each time. So in 2016, we had the GDXJ go up 300% into August of 2016. It took 26 months exactly for that consolidation process to end in September of 2018. Well, in September of 2018, after that process ended, we had everybody and his brother buying crypto, right? I mean, crypto was the hot thing, and it was a huge headwind for the sector. And I think it's safe to say that that's not a headwind any longer. So I fully expect it now to be a tailwind because they see that, hey, these things are just basically electronic beanie babies, and I'm not going to get rich on cryptocurrencies. So, if we take a look at the gold sector now, I mean, the gold market was poo-pooed all, for the past few years of not being able to be a hedge against inflation. Right a week before it bottomed, you had the Wall Street Journal come out and say on the front page that it's no longer a haven. Gold is no longer a haven, right? Well, ever since that article came out, it continues to go up. It's gone up over $200. So, when you have this contrarian signal like that, it's kind of like the switch is finally flipped in this sector, but it's only half up, right? I mean, we still got people are not convinced that the gold price is bottomed. They're still not convinced that mining stocks are bottomed, and I think that's going to start to take place in January because a lot of these people that sell for tax loss, a lot of them, they understand the quality of the project. They just made a lot of money in something else, and they want to take the tax loss. And then 30 days later, they're going to get back into the stock.
And for the newbies, oftentimes mid-December to the end of January, 100% gain, Dave, right? In a lot of these little stocks, it's like clockwork.
Absolutely. And junk too. I mean, crap juniors too. I mean, but I couldn't recommend a crap junior to my subscribers. Even if I look at a stock, I look at it and I go, wow, that thing is gonna fly. But I can't recommend a lifestyle junior company. I can't do it. So I want to invest my money, and I want to show my subscribers I'm investing my money into quality juniors that I know are de-risking quality projects that I have a good chance of being taken over by a major mining company.
And to affirm what you said, Dave, I've had conversations with you where I'll bring up a company and you're like, yeah, I think you can make money on that, but I couldn't present that to my subscribers.
That's right.
If you're just buying and selling without anybody knowing, you could make money with that. But Not when you're telling 500 people on your mailing list, right?
Exactly. Yeah, it happened the other day. A few weeks ago, somebody asked me about a company that I was in earlier. Would you get into this stock? Here. And I said, well, to tell you the truth, I really believe that it's a lifestyle junior because, a lot of that money that they've raised, it hasn't gone into the ground. Look, they haven't even put out any drill results in months. And when they do, they put out drill results maybe every 6 months or so. So even though you're probably right, the stock's probably going to double or triple from here pretty soon, but I still wouldn't invest in it. And that's exactly what happened. The stock doubled, in a couple of weeks.
So one of the ways that I arbitrarily determine sentiment is by looking at my YouTube comments and just seeing investor psychology, but also by asking you, is there still room in the Junior Miner Junkie newsletter? Are all 500 slots filled up? Because when it is, we could be maybe not at the top, but at least we know we're at least halfway up the bull market probably, right?
Absolutely. I got no problem using my subscriber base as a sentiment indicator.
Yeah.
And yes, there's plenty of room for people to get into the newsletter. Absolutely. I think I have about 300 subscribers right now. So plenty of room.
Plenty of room. So 60% filled. And that's at juniorminerjunkiewithay.com. As I always say when I sign off with Dave, it's an educational resource, not just a stock picking service. So if you want to learn, even if you don't buy anything Dave presents, you can learn from Dave. And I'll tell you that from experience. I've been following him, I think, for 6 years at this point, and I've learned a lot from him. So Dave, thanks for the monthly check-in, and let's touch base the first week of January in the new year.
Thank you, Bill. I look forward to it.